You can start sending your questions, whether it is for particular companies or not. We will also be touching on a few companies, but you can feel free to keep posted. Yeah, so the presentation is up. Yeah, come to the next slide. So we keep, last I think 3 or 4 connects that we have been doing. I think this is the fourth connect since October. We have continuously been talking about why we need to kind of reduce our return expectations. Last 2 years, especially 2023 and 2022, we have seen a phenomenal improvement in the markets. From first, if you look at the chart here also, in 2023 March, we were somewhere around here at these levels, and from here we are already up almost 30% in the market. That is a Nifty index, and this chart we are specifically showing you the performance between the 250, that is the Nifty small cap index, versus the 100 the large cap stocks in the 500 stocks universe, right? So what we are showing here is that how the performance kind of oscillates between the two. Typically the movement will be in that 0.5 line. If you see it will typically settle around that time. That is broadly when you are saying that the movement in the Nifty small cap versus the Nifty the 250 small cap stocks versus the 100 large cap stocks is broadly half of it. That is the size of the index. But there are occasions when these bull markets kind of peak, where we see this 0.5 index going towards 0.6, and then there are these troughs also that come. So there could be some kind of shocks which happens, and these will correct down to 0.4 and below 0.4 as well. So typically when we are in that less than 0.4 zones is when you want to load in on all the small cap stocks. So we always have our watch list ready on that angle. But currently the last 1.5 years, what we have seen is we are you look at it, we have always been oscillating on the upper side above the 0.5 and the higher side, which kind of suggests that in a way the valuations in the small cap index, that is 250 small cap stocks, is kind of getting a premium number now. We are kind of gradually moving towards the large caps and the small cap stocks trading at similar valuations. So a Hero MotoCorp, which is a OEM, which is a manufacturer of two wheelers, largest manufacturer of two wheelers in India, is trading at say 20x FY24 profit or FY25 profit. And we are seeing that the ancillary industry, that is the companies that are supplying to this Hero MotoCorp, or even Bajaj or Maruti or any of that for that matter, all those companies are also trading at same 20x valuations. See, you need to understand that in every industry there is somebody who has a value chain. So we will always find the high quality companies in every industry already form part of the large cap index. The 100 large cap stocks, even though there is a lot of skewness, that is, there is a lot of say the bigger companies like Reliance and Adani's and your HDFC, L&T, banks are all forming part of it. But if you look at the overall ecosystem of a particular industry, you will find that the one or two, that is the largest companies which are making the most amount of revenues or the profit, they are already in that 100 companies. And the small 250, so there are 100, there is 150 mid cap, and there is 250 small cap. So total is this 500 in universe. This 100 is what I was talking about, that they form a major part of the industry's profit. And these 250s are actually feeders. These 250s largely either supply to this 150 mid cap companies or this 100 large companies. You look at any industry's construct, it will be the same. 250 either supplying to 150 or directly supplying to 100. Okay. Now this 100 and this 250, typically the 100 is the higher quality, so it has to trade at higher valuation, whereas the 250 has to trade at lower valuation. So if these 100 companies are trading at say 20x or 25x FY25 earnings, these 250 companies, which is in the third bracket, they have to trade at half of that valuation. Okay, there could be some companies that are trading at 30x, some companies that are trading at 10x, but when you look at a combined average, this will be, if this is 20, this has to be 10. That is the overall construct of the industry. It is how economics works globally. Now when we see a situation where some this 250 is getting overheated, that is what you have seen the performance. So Nifty went from 17,000 to 22,000, that is 30% jump. In this same period, the mid cap index or the small cap index has jumped by 70 to 100%. in the same period, and that is why you are seeing this gap narrow from 0.5 to 0.6. So what we are telling you people is, we are not in a panic situation. We are not saying that we will not invest in small caps, that we should be selling and coming to cash. All we are telling you is, keep your return expectations lower. That is, when we have seen this sharp, now what is going to happen is, this 0.6x has to gradually come back to 0.5x. Okay, you look at these charts. So in 2007, we are showing this small cap fall, this 65%, and here in 2017, so this 2017 peak to 2020 COVID crash, this 50% correction, these have happened in 1 to 2 year periods. Okay, now this time the cycle could be shorter or the cycle could be longer. There are different people who will come with different things. What I, as an analyst, as an advisor, what I feel is that this time it's going to be even longer. So we might see a gradual correction of, say, over 3.5-4 years of this 0.6 ratio coming back to 0.5, or maybe going lower also, because that is where the industry has to settle. Just because there are a lot of positive trajectories, positive tailwinds for each of these companies. The government pushes there is stability in the government, globally things are not doing good, but in India the demand is good, the supply is also coming up. So in this situation, there could be a 3-year period wherein we will witness small caps are growing, large caps are also growing, but the return expectation, the returns, so what we saw in the last 3-4 years, it's not going to be the same. If you look at this chart from 2020, when the ratio was around 0.3 to today the ratio is 0.6, it is just 100%. But when you look at the index, the small cap index, that has gone 4x from 4,000 index levels in the COVID crash. It is today above 16,000 points. So that kind of ratio has come, and now when it goes down also, we will see both of them going up, but at a smaller pace, and eventually the large cap index and the small cap index will kind of converge at 0.5. This is the first part I wanted to tell you about. So whenever we are seeing some crash, whenever we are seeing some, like last 2-3 weeks, there is some 1-2% correction in one day, where I'm saying the 1-2% in the Nifty, the 1-2% in the Nifty index, but in the small cap it is almost 4%, 3-4%. You don't have to panic. You don't have to think about selling. Also, you don't have to think about immediately buying. This is not a market where we will miss out something. If I have given you a call where, say, buy at 175 rupees, the stock may shoot up immediately. So one day market is on, next day market is, we are seeing a topsy-turvy market. So you may see that kind of next day the stock going up by 4-5%, but that doesn't mean the stock will keep going up. It has gone through a trajectory. Rather, it is just that the market that day is facing some positive momentum. So we are seeing that 4-5% jump. It could come back down also. Do not be in a hurry to buy a stock that we are recommending. Rather, just wait for the price that we are telling you. See, we always tell you buy at a particular price or below. We never say buy at this price or vicinity of 4-5%. We are never about that. We are saying, because we have figured out that at this price. So let me just give you an example of recent called Suryodaya Small Finance Bank, wherein the book value of the stock is actually 175 rupees. So what I thought is, because this kind of market that we are in, but we want to keep investing because we have a lot of cash in hand, so we want to invest money. So let us invest in those stocks where there is maximum margin of safety. If the book value of the company, if it is say sold off today, the value of the company is going to be 175 rupees. At that valuation, if you are getting a stock, it's a bank. Okay, if you are getting that kind of a bank at that valuation, it is fine. So enter at 175 or enter at lower. Why I am saying enter at lower also? Because there is an opportunity we can get that dip. Next day market corrected, the stock was down at 170. Then the market shot up, the stock went all the way to 200 rupees. Again, if you see right now, I think the stock is trading between the 180-190 range. But as you know, with M-Profit, we have kind of figured out what you are doing and we have given you reminders accordingly. But I'm just saying that don't be in that hurry or don't be in that panicky that, I have missed out a stock or something. If you have really missed out something and we feel that you should have it, Jagriti or the RMs will tell you which one you need to invest at whatever price. For example, the Indiabulls Housing Finance case, our call was at 185, but because of whatever happened in the market, it went up to 230, came back to 200 and everything was happening. But when we saw that there is a particular corporate action coming up, when we thought that you need to have that stock at that price, we said at current market price, it was 200 something, just buy it. Just buy it and hold it. Okay, so that kind of updates we will keep giving you. Do not be in panic, and do look at this chart, kind of picture it out. When the when the market corrects, this is the kind of dip happens. It can happen between, say, a 1 year, 1.5 year period like in 2007-8, or it can happen over a 2.5 period like in 2017 to 2020. So these are all different type of diverses. We do not have historical data. In fact, if I can share something what I have read on from history of the stock market, is in 1992, after the Harshad Mehta arrest, the stock market was in a limbo for 6 months straight, and after that for another 2 years it just oscillated in that price only, and then only it gradually started to come back up when the 1996 after that war and those things happened, and then they started ki, we are starting to look good, and the market started rallying. So there could be even 3-4 periods where the market is sublime. So we should not be kind of, okay, we have made 40% this year, we are going to keep making 40%, let's pump everything in the markets. Please don't get into that mindset. Okay, let's move to the next slide. Yeah, so I think I briefly touched about this already. So this is where we are seeing the market. So the yellow line is your earnings per share, and the yellow line is your price earning multiple, that is the last 12 months earnings of the company on the last 12 months average price, and the blue line is the earnings per share. So when you look at this, you will find that there are these trajectories. If you look at 2003 to 2008, the kind of rally that happened, so the EPS of the index was less than 150 rupees. From 50 rupees it went to almost 180 rupees in a 4-year period. That is, in 4 years the profits went 4x. After that, just look at it, after May 2008 till 2020 Jan, not I am talking about pre-COVID, till Jan 2020, look at that period, the Nifty went from 180 rupees to 300 rupees. Okay, that is the only kind of movement. So in the 12 years period, the earnings growth in the market was just 8-9% annually. Then once again, after the COVID reset, is what we found the next leg of growth. The next leg of growth, from 300 rupees in Jan 2020, we are already sitting at almost 700 rupees today. Okay, now going by history, how the kind of whenever this so in 2002 what happened was, there was this dot-com bubble crash. So lot of tech stocks which were rallying crazily in 1991, 92, so 99 to 2001, they kind of collapsed, and after that we saw a new bull cycle. This is when the all these companies operating profits kind of shot up like this. One straight, if you look at that straight J, then it became like this. So now once again we are going through this same J. What we are feeling is, we could go toward this 800-900 rupees, and probably maybe some action comes, maybe some action doesn't come. It could be anything. Some war happens, some political issues happen in India, specific to India. We may have some weather issues, something or the other. We may kind of end up seeing another 7-8 years of this flattish period, wherein the profit growth became just 8-10%. I know many of you will not like what comment I am saying, but I am just saying that there can be these kind of scenarios, and we need to be prepared to be invested through these times as well. Because despite the profits of these companies not growing, many of these companies in this, like what happened 2008 to 2020, we found our HUL, our Nestle, a lot of these high quality companies, the Britannias of India, and the Marutis, Hero, the HDFC Bank, all these lot of these companies will kind of rise in these occasions. So of these 500 companies, we will find some 50-55 companies which will really do very well in that period. Okay, so what our focus will be right now, because we are enjoying this jump. So probably from 300 we already hit 700, maybe we go to 900 or 1000. We will continue to be diversified and enjoying this jump. But once we feel that we are kind of getting to the trajectory, we will kind of once again normalize the portfolio. Many of you, if you know your portfolios are right now skewed more towards small cap and mid cap stocks, we will then kind of look at adding more large cap stocks. But people who are veterans in the market, especially some of our clients who are already 10-15 years in the market, they are kind of, please do not get panicked here that there could be this situation already coming up. These are all timing. So there are a lot of things will happen. There are a lot of indications that we will get of things that are changing. So based on that, we will take calculative bets. Yeah, next slide please. Yes, so the other part I wanted to talk to you guys today is about the infra story. So I mean, last 2 years we have enjoyed massively with our infrastructure bets. Patel Engineering, Suzlon, ITD Cementation, Vascon Engineers, most recently NCC. Quite a few infrastructure bets have played. But I know now, many of you have now been sending us requests to look at the PSU infra companies and lot of other stories which are kind of showing lot of. So infra includes your railways, defense, road, everything. Okay, this infrastructure means actual infrastructure, the ports industry, defense, shipping, railways, your dockyards, everything is included. Irrigation systems, Jal Jeevan missions. Even though the government is kind of showing us that lot of great things are happening, but please look at this chart. What you are seeing here is the black line or the gray line is the NSE 500's performance in a chart. Then the red line is the infra index, that is the 30 infrastructure quality stocks in India, how the share price of those companies have fared and how L&T alone has fared. Sorry, in this red line we are not including L&T, just to show ki ex L&T what has happened. So you look at L&T, the kind of performance it has been given, and you look at the red line which has kind of broadly been stable, stagnant for the last 20 years. This is the kind of story that India has witnessed because of political issues, because of government kind of sometimes stopping funding, sometimes they kick back in, you cannot make this much profits, we have to control our fiscal deficit also, because all the governments, even though they want, I mean, as a PSU company or as some private company who wants to spend on infra, you are taking that risk because you want to make excess returns, right? But these are commoditized business. For example, a Suzlon which is making wind energy turbines, Suzlon is not is not having some technology where they are the only one that they can do it. Okay, it is just that Suzlon has a capacity. They have a capacity to make one 3 megawatt turbine. So 3 megawatt turbine is a huge size. Not typical turbines could be this small also, which are easily available in China. India doesn't even manufacture that. But a 3 megawatt turbine, which are used in windmills and all, is very huge. Now those huge turbines, it is not like they are the only one they can make it, but because the market structure is like that and nobody else wants to take risk, that is why Suzlon is kind of having an advantage, where they built this factory back in 2006, which is depreciated significantly today, and hence because of that they are in a position to make at lesser prices they are able to make higher margins. Okay, but when the government finds out that Suzlon is making very good margins, this is disproportionate profit for that company, they will start to cut back on it. Okay, most classical case why I took Suzlon is 2 days back in the Hindu business line there was an article stating government is considering bringing back reverse auction pricing in wind energy. What they mean is, see, this is what was the issue with Suzlon back in 2006-7. How we are thinking of infrastructure today, similarly in 2006-7, I was saying that for Suzlon's case, the government has now come up and said that they will be looking at reverse bidding for the energy prices. What that basically means is, back in 2007-8 also, when everybody was very positive on wind energy, India being focused on renewable energy and all, there was lot of focus for Suzlon to manufacture wind energy turbines and supply to companies like the NHPCs and other wind energy companies in NLC etc. who will actually then execute the EPC contracts, the L&T, the Exxon, to execute the EPC contracts. But what happened was, at that time the government decided that if we just allow these people to just bid for whatever prices, then we will not get they will make good profit, whereas we will have to pay higher cost. This becomes an issue when you have to look at fiscal deficit for the government. So the government decided we will do reverse bidding. By reverse bidding, you have to be the lowest bidder to get the project, the tender. Okay, so and that too it will be an open bidding process. Example, there are say 10 bidders. Whoever is bidding the least, say his bid is 100 rupees. So his 100 rupees will be disclosed to everybody, the best 3 people. There will be 3 people of the 10 who have bid the least amount. Of these three, the least amount will be told to all the three people, and they will be told ki if you match this, you can get the tender. So what people thought is okay, that we have to anyway execute 4-5 years down the line. So let us bid and get the project, and later we will see how it's executing. But because of the recession and the things that happened, lot of issues came up, wherein the EPC guys then decided that we will not be able to execute the project. Because of that, Suzlon, even though it had a huge order book, almost 14,000-15,000 crores of order book, it was not able to implement. It had to stop production also for a while. What sales it had already made, the receivables did not come to it. It went into a debt spiral, because of which it was in that zone for almost 15 years. Only last year, when they raised this QIP of 1800 crore rupees, is when they could actually come out of it. Please understand, the business never turned. It was just that the government policy was changed. The government said, okay, I understand all of you people are making lot of losses. Let me remove this for now. You can bid in whatever price. If the price is fine with us, we will take the project. Because of that, we saw a lot of these companies starting to once again get happy about it. Your Sterling Wilson Solar, your Suzlon started, okay, now we can win projects. They started delivering, the government started paying them. This was all just starting. In only 1.5 years, they've actually executed something and got some money back. And now once again, there are rumors that the government is thinking, these guys are starting to make profit. We should not let them make profit. So this kind of things will always be there in an infrastructure business. Whether it is railways also, you please do not think that because the railways has such ambitious plans, we want to become like the railways of Japan, that there is going to be huge expansion, number of trains added and everything. This is a very slow process. The government, if they get into fiscal deficit, right now also we are sitting at almost 5.2% of GDP is our fiscal deficit. If this 5.2% shoots up further because of say crude or gold or whatever, then the government will decide, okay, we'll have to cut down on spending, ask these people to delay projects. Because of the delay in projects, what will happen is that the debt spiral will start off. You manufactured something to supply in 1.5 years, but you find out that for the next 3 years they are not going to buy from you. You will not get money for another 1-2 years. So next 4-5 years you are stuck in a spiral. Once again, these stocks can go into a limbo, and that is why we need to be very careful with what the kind of stocks we are suggesting. We are at SafeGainz, we do a deep dive. So if you look at many of the companies' names, they have been there for a long time. In those periods, when they went into the debt spiral also, they had shown some very good, very positive, active management efforts, like managing their debt, cutting down on their properties, or start diversifying into new project verticals. And that is how they have survived the 2008 to 20 infra limbo. And we feel that being invested in that kind of companies can only help us in case the market is supposed to turn very sharply. For that purpose only, I think recently also we had given the exit for Suzlon. Many of you were pushing back to us ki why Himanshu, already the stock has gone from 5 to 48 rupees, people are saying it will go to 120 rupees, why are you already asking us to exit? But this is where we realize that what is the kind of profit this company can make on an annual basis. Is it trading at very valuations? You saw the previous chart, the 100 and the 250. So we look at the valuations part, we look at the fact that infrastructure has this history where the government can squeeze it for many years to come, and hence we decided let us come out of Suzlon at these prices. Okay, I think this was the gyan that I wanted to give. Let's touch on couple of company updates I wanted to talk about. First company is Solara Active. Unfortunately, this is one stock where we had to book loss again. Why I say again, for especially some of you who are new, we bought this stock back in 2021, and then in 2022, just 6-7 months after we bought, the management abruptly came up and said that we are going to change our business model. We are going to so they used to supply to distributors. This is a pharma company where drugs like paracetamol, the paracetamol drugs are supplied to distributors. That is a Dolo 650 and ibuprofen. They are supplied to distributors, and distributors supplied to the pharmacy. Now what Solara decided is that we don't want to have intermediaries. We will start directly supplying to the drug manufacturer, and he can directly supply to the just get the medicine from him and directly sell to the end pharmacy. But that business kind of backfired for the company. We booked some 15-20% loss at that time. That was at 1200 rupees. Then the stock corrected all the way to 400 rupees. This is a Pondicherry based company, so we have known the company for a long time. We once again met the management in 2023. We felt that there is a case where now that they have corrected the mistakes of the past, they are back on a growth trajectory. But as soon as we bought, the company went into this fire accident. Initially they said it's a small accident, they are not going to much damage, because they are like within the factory there are like 120 machineries, and of the 120 machines only 4 machines are impacted. So they said that it's not going to be a material loss. But in February, that is last month, when the results announcement came, they said that it was a massive loss. They lost almost 15-20% of the revenues. That day only the CFO of the company resigned. The ex-promoter of the company, which had actually went away from the company, started selling his shares in the market, came in and in the earnings call of the company gave us an announcement that I am back and I am going to be looking after the company going ahead. So this kind of abruptness, very randomness in the business management, they are again talking about changing their business model to get back on growth trajectory, expand margins, but there is no clear roadmap. So because of this kind of situations, we decided to part with these companies. In a way, these are some kind of I would say mismanagement that companies do, especially in small caps. We find this very often. We try to stay away from it, but occasionally we are also getting caught in that. Solar is one case like that. I think we have one more case we will talk about next, that is Dishman Carbogen. That's the next slide. Yeah, so Dishman Carbogen, actually it is a emotional hurt also right now. We have been holding this stock from I think 90 rupees. We got out at 180 I think it's been some 2-3 weeks since we got out. The reason we got, I've just put that in the slide also. The company first says something else last quarter, then changing its commentary this quarter. The point is, we are fine with changing the commentary, but when you said that this is doing very good in the month of November, how can you say that in December, for October, all the 3 months, that is October, November, December, all the 3 months you were not doing well? This they are saying in Feb. So what this kind of says is the management is trying to sugarcoat. They are trying to not hide the truth in a way. Whatever issues are there in the company, they are trying to sugarcoat it and present it to you so that you feel that okay, this is a small thing, next quarter is going to be good, so let's keep investing, let's buy, the stock is a little bit very attractive valuations. But always we need to be very, very careful. If the management is repeatedly changing this, sugarcoating their stances, we are very, very susceptible of this. The other problem, which is the main reason why we kind of decided to exit, is management doing accounting mischiefs. So what the company has done is in their presentation, so they have reported that their EBITDA margin for the quarter is actually a loss. They have reported EBITDA, that is the earnings before interest and tax for the company, is a loss. But in their presentation, they are claiming that their EBITDA margin is actually 17%, because there is some one-time forex charges and all that. Now what I did was I just went back to the last year and just saw what was the forex impact, because this is an Indian company having huge operations in Europe. 45% of the revenues are coming from Europe. So it is not like only in this year they are having some one-time forex losses. So I went back to last year and I figured that if I adjust the same forex losses last year also, the margin was 23%. And management right now is saying that on an adjusted basis. So I met the management also after the earnings call. The management is claiming to me that on an adjusted margin basis, they have actually expanded their EBITDA margins year over year, which is a blatant mischief. Okay, so this kind of sugarcoating companies, making accounting mischief so that people kind of feel okay, this is a temporary thing, the next quarter is going to be good, and then suddenly you are seeing in Twitter and in Telegram channels, everybody is talking about Dishman Carbogen, some popular investor that very day. So when the stock was down, so the stock actually opened 5% down. The stock was trading at 190 rupees, it opened at 182 rupees after the results. And because we had immediately looking at the results, we figured out that there is an issue. We wanted to exit the next day morning itself. the next day morning itself he told you that whatever price above below 190, I mean above 180, just sell it off, right? And what happened was the stock listed opened 5% lower, but the ended the day 10% up. How did this happen? Is because some popular investors bought the stock. I do not want to name them, but I will only have to highlight to you people that there are many popular investors who do something called as name lending. In stock market, name lending is a very mischievous practice. What they do is, example, I am a promoter of a company and you are an investor, you are a popular investor. Okay, what I will do is, I will come to you and tell you, sir, you buy my shares from the market, okay, at this price. The consideration, you don't have to invest that money. I will give you 2 properties of mine as mortgage to you. Okay, you buy, I will give you those 2 properties, you can keep that as a lien. I will, you buy the shares from the market, you will make a profit eventually, because when you buy, everybody else will also buy, and there will be the cycle will keep going up. So you will make money. If you don't make money, my property, you can keep it. This is the guarantee I am giving to you. If you make money, you will return the properties back to me. This is how name lending happens in the stock market. In the small cap and the micro cap space, this is a very, very popular practice. It is fraudulent in nature. SEBI has often identified a lot of people. In fact, I think a couple of days back, I had shared this thread on the WhatsApp channel where one company had just negotiated with one of some 7-8 investors that they will buy the stock and they will pump the stock price. It was a 80 crore market cap company, and they had ambitions to become a 5,000 crore company. Imagine, this is a promoter who is not doing his business, who is not focused on growing his business, rather he is focused on increasing the market cap. He is playing the ego game. Many people start getting, so I mean, imagine you yourself, somebody comes and talks to you, I know you are a 2,000 crore market cap company, you are a 5,000 crore market company. That's the ego boost that you get. So all these, there are a lot of these kind of promoters who are doing this mischief to boost their egos. They are not going to make any money. It's not like they are going to sell their shares or they are going to do something. It is just that they are feeding on their ego. What happens is, in a bull market, they can inflate their ego, but when the market will change direction, the ego will diffuse in such a way that the stock will be in lower circuit for many days continuous. You will not be able to sell those stocks. You may get into lot of stories what the management is saying. There will be lot of social media things happening. You will get WhatsApp messages, 10 point, 12 point messages on WhatsApp saying these are all the good names about the good things about the company. Even for Dishman Carbogen, couple of our clients have come and shown me messages where they have got a detailed message. They've also got the names of the investors who bought that day. And they were asking me, Himanshu, this is a famous guy, he comes on TV also, he has 5 lakh followers on YouTube, on Twitter, and why are you selling at this price? And this is what has happened. The last thing that I'm saying, the stock is at 25%. We sold at 190 odd, and the stock is I think around 250, 260 right now. So this kind of manipulations do happen in the market. There are two ways to deal with it. One is you can play the game with them, but then you need to be a part of them. You need to know them. When you don't know them, why do you want to burn money? Right? Just stay safe. Keep only think about how you want to protect your capital, and the returns will automatically come to you. This is how the stock market has worked for 40 years in India, for 100 years in the US, and will continue to work for the next 100 years in India. Only think of how you can protect your capital. Think of how you want to make that 25 lakhs portfolio, 1 crore portfolio without losing, without going below 25 lakhs. We will end up making money. We will end up making crazy amount of money. Last 5 years has been a reality. SafeGainz, we drew this line. So I have known all these things. I drew the line back in 2018 that I don't want to be a part of these kind of schemes. I am also approached by a lot of IPOs, the SME IPOs, tell them that they are ready to give me commission to actually invest. But as a philosophy, I don't want to participate in them. Okay, I may get caught in some of these names by genuinely caught, like in this company, where later only I am finding out that these issues are there. But that is fine with me. I don't want to willingly participate in these things. Is what my point to you also is, that please be careful. Do not get carried away by other people, especially in the last 3 years. people who have started investing post COVID, who are talking about these things. Do not get carried away by them that they are making so much amount of crazy money. There are a lot of companies who are doing this mischief. I want to name one more company called Visakha Industries. HIL, our pick, HIL has a competitor called Visakha. So HIL is actually the market leader. Visakha is a Gujarat based player. They are also good in the same field, that is your cement blocks and roofing sheets and work. Only thing is, this year in this year's annual report, that is FY23 annual report, which came out in July, they made an announcement that they are getting into solar EPC panels. Now let me tell you, solar EPC is a very commoditized panel. Chinese players rule the market. Nobody other than China makes profit globally. In that name, there is already SW Solar, which has struggled for 10 years. We have bought recently because they are going into the turnaround. But a company like Visakha, who is not a market leader even in the core business that they have been in for 50 years, right now is just talking about being in solar, and the stock has shot up by 55%. Okay, we don't know what kind of business they will generate, whether it can become 10%, what is the profit, nothing. But just because they are talking about it, the stock is a 50-55%. I am saying that it's better to be avoid of these companies. I have shown you in the last how many years you have been associated with us. I have shown you that we can make money by diligently being aware of what the companies are doing, what is really there. It's not just the stories, rather what is there on the plate and what can they actually deliver, what are their capabilities. The right to win, the right to get market share, right to get profit is what we evaluate, and based on that only we take our investing decisions. Okay, I think I've taken quite a lot of time. Let me just start the Q&A. Guys, please, you can post your questions. Okay, this is an interesting question. So I just spoke about Suryodaya. So the question is that Suryodaya was trading at 90 rupees in 2022. Today it's 170. Why not buy then? Why buy now? So let me tell you, Suryodaya Small Finance Bank came up with its IPO back in 2021. I had evaluated the IPO as well. I have been, not actively, but closely.
You're now broadcasting your webinar. All attendees are in listen only
closely tracked that kind of limit wherein they underperformed. There was a lot of credit cost increase. This is okay, let me tell you what Suryodaya Small Finance is. Suryodaya Small Finance Bank is a UP based lender. They do small ticket loans, that is around 20,000 to 2 lakh rupees loans is what they give. They are giving it to very small borrowers. Small borrowers, I mean, they could be like some small mess, kitchen mess that is working in the roadside, or somebody say has a small vegetable stall. These kind of lenders borrow money from Suryodaya Small Finance Bank. In UP, this is a very huge market because the kind of state that they are in, but the kind of growth that they have been seeing of late, they are starting to see a lot of jump in performance in business. Lot of people who used to migrate out of UP for purposes of labor, for earning money, are actually starting to go back to UP. They are finding work there. Lot of manufacturing is taking up there. Maybe it is a UP government, whatever could be the reason, but the point is they are starting to make money. Salaries are kind of coming back up. It is on par. So even, if you look around, you work with somebody, you will hear that they are now demanding salaries which are in line with, say, somebody who makes in a restaurant or somebody who makes in a factory. For menial jobs or even like a driver's job, salaries are actually kind of going up. This is the reason for that. What we feel is that we have tracked this company for a 2-3 year period. We used to be invested in other banks which were more attractive at that time. We got out of some of them recently, so we felt that there is a need to increase the allocation of financials in the sector, and because of that we feel this is right now a good time to look at Suryodaya. The stock is trading at 1 time its book value. Next 2 years definitely should be good for UP because the government continuity is going to be there. and given the salaries are going up, this company is also kind of expanding into other segments, that is coming up with their own credit card. They have a very good depositor base. 50% of their borrowings, that is the deposit that they have taken, are actually savings account. So the advantage with savings account today is, if you are just offering 4.5% or 5%, because your SBI and all is giving 3.5%, if you are offering 4.5%, you are getting savings account balancer. And these people have a catch. You have to do that flexi FDs, or you have to hold 1 crore or 10 lakh, whatever minimum account balances and all. So because of those things, there's an attraction for a lot of these people to keep their average monthly balance high. This is a cheap source of funding for them. This guy is actually replacing money lenders in UP. So money lenders typically charge 24%, 21%. Small finance bank charges 18%, 19%, slight discount to them, but then still a premium. And this kind of helps them when the credit cycle turns, because right now the credit cycle is good. We are expecting less amount of NPAs coming up. We feel next 2 years there is going to be very phenomenal growth. Right now we are looking at a target to be 350 rupees. I think we will keep evaluating the company as how they keep coming up with results. With election, if there is a limbo, if there is something else coming up, we will keep track of that, and based on that we will take a call. Right now it is a hold. We will recommend to buy only below 175 if you are not already holding. I have seen in the M Profit, I think everybody is holding, so that is fine with us. Okay, next is on the chemical sector. So guys, chemical sector, see, there are a lot of subdivisions in the chemical sector. The largest chemical sector in India is agrochemicals. Why? Agriculture is the largest, money employment generator, 20% contribution to GDP and things. So that's typical demand for fertilizers and whatnot. And because of that, agrochemicals has been a very old industry in India. Because of the issues with China post COVID, many of the European and the US players thought that instead of buying everything from China, we will start to buy China plus one. We will start to buy from India. We will start to buy from Malaysia. These are agro industries, Indonesia and all. But what happened is, once China started coming back out of COVID, that was early last year, they decided they need to get back on market share. Because their own economy is in distress, they are not seeing too much of demand there. So what they decided, we need to keep manufacturing, because only if you manufacture the GDP goes up. So they will manufacture, and the excess production that they are having, they'll just dump it in the markets. The government there is following a very, very loose monetary policy, and they are fine with dumping stocks. So China first decided to dump in US, in Europe, and whatever low quality is left, they started to dump in India. This cycle has been going on for 3 quarters now. My understanding is, at least another 2 quarters this will continue. Other problem is, within US and Europe, they are going through a contraction in their economies. The GDP is kind of not growing as such. The demand is stagnant. So there is oversupply. There is existing destocking, because the demand is lower than what it was supposed to be. The weather is changing there. El Nino in some countries, La Nina in some countries. So all those things are impacting the demand supply balance across different countries. At least next 2-3 quarters, they are not looking good. Our plan actually is to start buying when the first green shoot starts to come. The first shoot, it may happen next month also, that some green shoots are coming. Some countries in the US are starting to show improvement in agricultural demand, or in Europe, or say something in India, China stops dumping, something like that happens. We may think of adding, but otherwise we are going to stay away. The other segment within the chemical industry is your agrochemical. Then you have your pharmaceutical chemicals. So in pharmaceutical chemicals, same story happened. Again, China is the leader. But the problem with pharmaceuticals is, during COVID, lot of innovation was happening. Lot of companies were getting funding to do patent get new patents, do new tests and everything. But post COVID, with the interest rates kind of rising, there is a scarcity of capital. Because of that, new project is not coming up. So even though sales is not negative, like if you look at the industry, some companies are negative, but at an industry level, mostly everybody is now flattish, but they are not able to grow. This growth started to come last year again, because I mean last year I'm talking 2023, not 2022. In 2023, after April, May, they started to show signs of growth. We bought companies like Shilpa Medicare, Aarti Pharma Labs and all. These are all pharmaceutical chemicals and CDMO companies. They were starting to show that growth, and we felt okay, this is a good opportunity to be. But now once again we are starting to see some amount of issues kind of coming up, because US is not seeing that much amount of what do you call product testing or new product launches coming up. Even the US FDA, the Food and Drug Authority, they are starting to now do all the inspections and all. So probably another 3 to 6 months down the line, I'm sure 3 months down the line, we should start seeing exports start to come up. That will be the next phase where we'll start buying. Right now we are not buying, we are kind of stable. We will be looking at pharmas probably 2-3 months down the line, once these companies where the FDA audits have taken place, their reports will come out, they'll start exporting. That is when we'll start adding again. Now there is another part of chemical industry which is very critical, the material chemicals, like electrolyte, lithium salts that is used in EVs, or your something like commodity chemical companies. So in this space, we are starting to see some kind of traction already coming up. We are looking at couple of companies as we speak. We will be meeting some of them in this coming month. We are also planning few plant visits in the outskirts of I think Surat. Based on that, we will finish the research and then we will kind of take a call. We feel that's a very good runway. I think there is going to be a kind of a J curve in the growth for them starting from 2024, provided the electric vehicle space continues to take traction. I'm not sure if every of you are reading the news, but example, recently Tata Motors decided to reduce their EV prices. It is a mix of demand stagnating, also a mix of prices kind of coming down. So if prices come down too sharply, what happens? Many people postpone the delay. Now you also imagine if you had booked a Tata Motors, a Tata EV, you had said just got delivery last month, and this month you are hearing that the prices are down 10%. It will pinch you, right? So there could be a situation where people postpone some of the decisions. In fact, in US, there are companies like Lyft, which is like Uber. There's another company, Lyft, LYFT. They decided to postpone all the electric vehicle purchases because they are frustrated with the kind of price correction that keeps happening. Tesla, they bought Tesla one round, and they bought another last year, and now they are hearing that Tesla again prices are going to come down. So first they bought it some 7x amount. Second time they bought it X minus 30%. Now another 20% price correction has happened. So this is kind of giving them, that stigma. Why should I overpay? So they are all postponing the decision. So I feel that the cycle is going to reset, and then after that only, this J curve will kind of come. So we are preparing for that. We will kind of look at that. Okay, I think just 2 minutes. Last question. So defense and railways, I think I've already covered on that. See, lot of companies are kind of trading today at whatever their order size is. This order book is actually executable over a 5-year period, or even it could extend to 7-8 years also. You never know with how the government and the policies change. But the market is pricing it as if they are going to do that business next year. So there is going to be a lot of disappointments coming up. Hence, we are being very careful with our bets. I think in that space right now our only bet is DCX systems. There also there could be disappointment, but why we are holding that is the valuation is very supportive. The stock, the company is continuing to execute. There are some issues in the company, but we feel that if they can win couple of more orders, there will be visibility in the revenues and the stock can shoot up. We have already bought at 250-300 levels. Recently, we for some of you, we have given a call to add around 310-320 levels, and we wouldn't recommend adding further. We would say stick to that levels. The plan is we need to see whether this company also disappoints or not. Only thing is we also wanted to ride because the river is flowing, so it's not like we don't want to swim. We also want to swim, but we only want to swim where the tide is in our control, with the tide. Okay, I think there are no further questions on the chat as well. Thank you everybody. Thank you so much for your time. Please feel free to reach out, ask any questions. In our WhatsApp channel also you can continuously ask, put thumbs up and message us in our personally any questions that you have. We will take care of, we will try to respond to you in a timely manner. Thank you everybody. See you next month.
The webinar